Good morning, everybody. It's Wednesday, October 9th, 5:24 a.m. Central Time. Grain markets are higher this morning. December corn futures up 2.25 at 423. November soybeans up 5.75 at 1022. December Chicago wheat up 9 cents at 603.75. December Kansas City wheat up 10 at 613.75. December spring wheat is up 9 cents at 654. Let's start off with yesterday's sell-off in the soybean market.
So soybean futures fell sharply yesterday. The most heavily traded November 24 contract lost nearly 18 cents per bushel. The market took about 5 weeks to rally $1.15 per bushel and only 6 trading sessions to give back half of those gains. Lack of details regarding China's fiscal stimulus likely played a role in yesterday's sell-off. Traders appear to be glued to any headline regarding the stimulus. In addition, rains are slated to return to Brazil next week. U.S. harvest pressure may also be an issue given a wide open weather forecast.
I think China was the deal yesterday for the most part. I think that was responsible for the vast majority of the selling pressure. The soybean traders managing positions in soybeans are very interested in this stimulus. They want to know if it's going to result in better soybean demand. China comes back from holiday. They provide no details, no additional stimulus measures. Some people thought there was going to be additional stimulus measures announced. I suppose that there still could be, but we just haven't seen that. The other factors, I think harvest pressure is absolutely a factor here. So in real time, U.S. soybean harvest is probably about half done. You've got a farmer who isn't extraordinarily interested in storing soybeans. There's a lot of obstacles to storing physical grain. You've got higher interest rates. Storage costs are expensive. We've got carries in the market. I think the farmer is probably undersold relative to a normal year. I don't think there was a ton of forward marketing this year. So you may see a lot of beans sold out of the field. Maybe that's a factor. The rain returning to Brazil, we'll talk about that in a second. Crude oil prices were sharply lower yesterday. We'll talk about that. That doesn't help. The one positive thing I'll say is that U.S. soybeans are competitive on the export market versus Brazil, and probably will be until Brazil harvests beans, first quarter of next year.
So, as you mentioned, rains are likely to return to Brazil next week. The forecast hasn't changed much this morning. While there is some conflict between the Euro and GFS, both models indicate that Brazil's wet season will return next week and into the following week. Soybean planting in Brazil has been slow as a result of hot and dry weather. Farmers will wait for rain in order to ensure proper emergence and avoid replanting. Brazil's growing season is still young. November, December, and January will be more important with regard to the markets and Brazilian weather.
Yeah, it's really early. This is like us getting worried about the U.S. crop in April for the most part. Fast forward a couple months is more prime time, like weather market season. But this does matter. And I think you're going to see the forecasts are fairly convincing here that about this time next week, around the, say, 14th or so, you're going to see rains return. Now, the Euro and the GFS are in conflict, but if you look at the extended GFS, which is kind of stingier with the rain, even the extended GFS is very wet out through the 25th. And as a percent of normal through that same time frame, the next 16 days, you're going to see rains in Brazilian soybean country normal to above normal. So I think that for the moment, you can probably take this planting delay threat off the table, because they're going to catch up very, very, very quickly.
China is retaliating against the European Union's proposed tariffs on Chinese EVs. On Tuesday, China announced it is considering hiking tariffs on gasoline-powered cars with large engines from the EU. Additionally, starting on Friday, China will impose a 39% tariff on brandy imports from the EU. The policy measures follow the EU's decision last week to impose tariffs of up to 45% on Chinese EVs for the next 5 years. Also on Tuesday, China's commerce minister raised concern over U.S. policy on Chinese semiconductors and smart car technology. The Biden administration has proposed banning the sale of Chinese smart car software, and a 50% tariff on Chinese semiconductors is set to be implemented next year.
China has now retaliated against, there was something against Canada for the EV tariffs, I think, that they imposed, and it was supposed to be something with regard to canola. They were going to do some multi-month sort of probe into canola dumping, I guess. And now they're also retaliating against the EU. Just a couple weeks ago, the U.S. hiked tariffs on a number of things from China, but we haven't seen any retaliation. Just me thinking out loud here, and this is not a prediction by any means, but when China tariffed U.S. soybeans during the trade war in 2018, they had African swine fever in China, and as a result, they could afford to go without U.S. soybeans. Maybe this time they can go without U.S. soybeans for a different reason. Maybe it's because the economy is in such bad shape in China that they can just avoid buying U.S. soybeans at some point in time if the tariff trade war situation gets bad enough. And a lot of that's going to be political. Who's the next president? Is it Harris? Is it Trump? I don't know. They're both doing tariff type stuff. So it's kind of interesting, but China hasn't really made any sort of retaliatory effort against the U.S. for what we've done recently, but they have done so against the European Union and also Canada to some extent.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about some of our premium videos so far this week?
I was joined yesterday by international fertilizer market celebrity Josh Linville from StoneX. We talked about fertilizer price risk, some geopolitical war type stuff, some weather type stuff. What does Josh think in regard to fertilizer pricing for both fall and spring needs? Should farmers be locking stuff up? We talked about that. I tried to get as much out of him as I could. He's really great. Corn and soybean marketing. Guys, I know you're busy. I get it. This is a very busy time of year, but you can't ignore marketing even though you're busy. This is the part of the game, the business that pays the bills. It's the hard part of the business for most of you guys. Farming, growing the crops, the easy part. This business stuff, the budgeting, the marketing, all of that. This is these are the jobs that pay more for you on the farm, and this is the job that's going to really pay the bills ultimately. I did a corn soybean marketing review on Monday. If you guys aren't up to speed on sales, if you're looking for a game plan, if you're looking for something simple, I would very much advise that you check this out. Basically, I throw cash grain marketing recommendations out there. You can follow them or not follow them, and that's it. We don't want to market your grain. We don't want to do your futures business. We just want to kind of tell you what we're doing, and we want to charge you $50 a month for it, and that's it. So go to standardgrain.com. You can sign up this morning. I'll forward you a copy of this morning's email. It includes those videos, our 6 most recent videos, all of my cash grain marketing recommendations. Give that deal a shot this morning. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. Give that deal a shot.
Oil prices tumbled on Tuesday. A potential ceasefire between Hezbollah and Israel sparked the decline. WTI crude fell 4.6% to $73.57 per barrel. Oil prices rose about 8% last week, the most in over a year, due to growing concerns about rising tensions in the Middle East. It was anticipated that Israel could strike Iranian oil facilities. However, analysts believe Israel will instead target military and intelligence sites in their next attack. Oil prices were also pressured on Tuesday as doubts surfaced over China's commitment to revive its economy.
Yeah, that's a big, nasty sell-off and kind of a downward reversal in the crude market. I'm not going to say the rally's over. I'll say this though: this is it's a supply scare type event. And in the grain, what do we know about supply scare events in the grain markets? They're typically some of your best marketing opportunities. If you run into a weather scare in June or July, that's more often than not one of your better marketing opportunities. So you've got a crude rally on a supply scare event. I'm not saying it can't continue, but it's not a demand rally. It's not because the economy is so good around the world and we're using so much crude. It's because you've got worries about supplies coming out of the Middle East. So I don't know. I mean, yesterday was an ugly day. Could the rally continue today? I mean, you're just a headline away from making new highs, I guess. But yesterday wasn't especially good. Bloomberg Commodity Index had closed higher for 4 consecutive weeks and could close lower this week if things kind of stay stagnant here. So I hope the commodity rally continues for the sake of the grain markets, but is under a little bit of pressure here this week.
Brazil will soon be home to the world's largest soy oil-based biofuel plant. Grupo Potencial, a Brazilian energy company, will invest roughly $109 million to increase biodiesel production at one of its plants. With the expansion, the plant will increase its annual biodiesel production capacity by 80% to 428 million gallons. Construction is slated to begin in 2025, and it is expected to be completed in 2026. The investment comes as Brazil's president is expected to sign a bill into law that will encourage the gradual increase of biodiesel blend into diesel.
Big picture, this is very good news. Today, it doesn't mean anything, but over the long haul, to use more soybeans for biofuel is a good thing because China and other soybean users are going to continue to use the same amount or hopefully more beans for traditional type things like feeding meal to, hogs, that sort of thing. But if we can start to use more beans for biofuel in addition to your traditional type items, that would be a positive. But for the moment, the soybean market, the soybean trade is glued to U.S. harvest progress, the stuff in China, Brazil, that sort of stuff.
USDA reported a flash sale of soybeans on Tuesday. U.S. exporters sold 6 million bushels of beans to China for delivery during the current marketing year. U.S. soybean export commitments for the current marketing year are the third worst in the last 10 years.
Yes, total commitments. This is to all destinations are the third worst of the last 10 years. And same thing with sales to China, third worst of the last 10 years. Only 2018 and 2019 years associated with the trade war were worse. So China's appetite for U.S. soybeans, even though we're competitive, is below average and below where we'd like it to be. That's not to say that they couldn't come in and buy a whole bunch of soybeans, but the flash sales that we've seen and the activity that we've seen is just kind of minimal relative to what it could be. What did cattle do yesterday?
Cattle futures were higher. Live cattle were 25 cents to $1 higher. Feeders were $1.15 to 162 higher. Box beef was narrowly mixed. Choice ended the day at 306.84. That was up 91 cents. Select ended the day at 288.61. That was down 72 cents.
Outside markets on Wednesday, U.S. dollars up just a little bit. Stocks are off. Bonds are up just a little bit. Crude oil is now down. It had been higher overnight. Now down 25 cents in the December WTI at 72.73. Have a great day, guys. We'll be back on Thursday.